As an active EM fixed income manager, I'm excited for the next period in our asset class because where you invest is going to matter. It's not going to be a rising tide that lifts all boats. It's going to matter where you invest, which country, which company. And that will allow our approach, I think, to really shine in terms of being a steward of our investors' capital in what can be volatile markets.
As active investors, we have to welcome volatility, and currency volatility in emerging market corporates allows us to apply a very interesting criteria for selection. A, we always go, when we can, for naturally hedged corporates. B, we tend to target corporates which are less exposed to political risk. And C, we are looking for corporates where you have either a very, very strong balance sheet or a good visibility in terms of their financing needs. So we see that really as great tools for selection.
I was visiting in Hong Kong, and what really struck me was we forget the vibrancy of emerging markets, and in the whole narrative that's developed about protectionism, a declining globalization, we forget what we are talking about is growing population, hungry to look outward to the rest of the world and hungry for growth. And that is such a hugely dominant factor for why we believe these markets are going to be performing.
True conversation with corporates, meeting with a bank and asking them their trend in terms of lending, meeting with an exporter of beef and asking them how they are impacted by the China reopening, meeting a retailer and asking them how they face margin pressure and how they mitigate that, and how that margin pressure is compensated by the depreciation of the currency. That gives me a strong sense of the reality of all the macro trends.
As the world focuses more on sustainability factors, it's very positive for EM fixed income, because what we want to do is to move to a more sustainable growth path by more structural capital. So the more we focus on use of proceeds, on green bonds, social bonds, sustainability bonds, that really builds up a narrative for focusing on longer term outcomes rather than just focusing on the shorter term aspects of a country. And that is what I think could elevate emerging fixed income to a higher plane in terms of its returns over the next 10 to 15 year cycle. To be an EM specialist, we need to be a generalist. We talk about the dollar, we talk about US growth, we talk about European growth. And I think what distinguishes our asset class is that it's defined by what we invest in and not by what we don't invest in. Emerging markets are the world. So I often think EM is a misnomer. We should actually be called World X.